So one of the things that'll help you guys too is that as you're playing out these longer term trades is that you will gain an edge over many people out there if you start the habit of referencing other time frames. Okay? If you just trade off of, say, a 15-minute chart and that's your world, and you're going to take any long or short signal that happens on the 15-minute chart, you're limiting yourself to a very small room. It's kind of like, now I can't think of an example off the top of my head, but it's kind of like, we're in this room talking about one thing, and there's some people in that room talking about something else, and some people in that room and talking about something else, and it'd be and we're all talking about trading, and it'd be nice if there was a quick summary up here of what everybody was talking about. Like if they like gold and they like gold and we like gold, oh gosh, maybe that's a bad thing, but so what I'm getting at in a very roundabout way here is make it a habit, no matter what time frame you're trading off of, to start referencing higher time frame charts. As an example, when I trade currencies, okay, remember when I was talking about different business styles? Do you want to have the high cost business or the low cost business? Well, I don't trade currencies on anything lower than a 60-minute chart. Okay, I'm not scalping off of a 1-minute chart or anything like that. That's just a lot of work for a little reward. And so what I do is I'll take a trade off of a 60-minute chart, but I'm only interested in taking a trade off of a 60-minute chart if it lines up with the weekly chart. So here's a weekly chart, here's a daily chart, here's a 4-hour chart, and here's a 2-hour chart. So the blue bars on here are bullish, the red bars are bearish. The weekly chart is bullish, the daily chart is bullish, but the 4-hour chart is showing some selling pressure, and the 2-hour chart is showing some selling pressure. Based on this, on the 60-minute chart, I'm only interested in taking signals that go in the direction of the weekly and the daily. Okay? So here's my 60-minute chart. So on the 60-minute chart, when I take a signal, I'm going to go back and make sure I'm referencing the weekly chart, the daily chart, the 4-hour chart, excuse me, and the 2-hour chart, and make sure they're in alignment. Okay? If what I'm waiting for here is to see that all 4 of these charts have blue bars, meaning that they're all bullish, then and only then will I start looking at long setups on the 60-minute chart. Otherwise, I stand aside. Okay? Now, if you've got a lot of monitors, you can sit there and look at, you can do this for a lot of different markets. One thing we did with TradeStation is we thought, okay, well, can you on this one chart actually pull data from all these other charts so we can see what's going on here? So now you can go in here and say, all right, I want you to look at the weekly chart, the daily chart, the 240, and the 120, and then let me know when they're all in alignment. Okay, so then you do that, and now what happens is that if the 60-minute chart has gray bars, you stand aside. Okay, it's neutral because there's conflicts. Like right here, it's gray because yes, the weekly and the daily are blue and they're bullish, but the 4-hour and the 2-hour are bearish. So it's grayed out, saying, you know what, this is noise, stay away from it. But when this is blue, it also means that all 4 time frames are blue. So those are going to be the strongest signals. So if I get a buy signal and the bars are blue, I go with it. Obviously, if I get a sell signal, I'm not going to take it, and it's just a way to do it. So I think that that's kind of a nice way to do that. And again, you can do that yourself, manually looking at different charts, or like with something like TradeStation, there's indicators that you can get that'll do it for you automatically, which I think is kind of cool. And the same thing, like if I can find it here. So right here, 23, oh, it starts at the beginning, great. So as an example right here, so this is a 144 tick chart, and this is a time frame that I'd use for scalping. So right here, here's a short signal that we get, but you would have lost money on this one. Here's a long signal, you would have made a little money. A short signal, you would have lost money. Long signal, make money. Here's another long signal that works out really well, and another long signal that works out really well. And again, if you're just looking at this one time frame and you take every signal, you kind of get shot back and forth. But again, you overlay it with the higher time frames, and whenever they're gray, you don't take it. Oh, short squeeze, do I take it? No, I pass on that trade. Long squeeze, do I take it? Yes. Short squeeze, do I take it? No. And then, so again, that way on the smaller time frames, even if you're just day trading, you can reference like these daily charts and filter out the signals that that don't have as big of a chance as winning. And that's something I found, especially in these volatile markets, really help, because you're reducing the amount. I mean, every time you throw your money out there, all right, and if you're using like a 1-to-1 risk-reward ratio, it's kind of like, well, this one's either going to work out and I'm going to make some money, or I'm going to get full stop out. And it's just a way to reduce the amount of trades where you get the full stop out. So I think that's pretty useful. And you can also do it too on the squeeze. So here there's a squeeze on a 5-minute chart. It fires off right here. You lose money, but this squeeze works out great, and this squeeze works out great. You can do the same thing. Hey, reference a higher time frame. Now when you get a short squeeze, hey, that one's not in alignment with these bigger time frames. Don't take it. This one is in alignment. Take it. This one is in alignment. Take it. So there's a couple things like that. And again, if you've got the monitors, you can do this yourself. And just, obviously if you're watching like 30 markets, that's going to be pretty difficult. But if you're looking at 2 markets, you can have your trading screens, and then each trading screen has your 4 references, or you can suck them into that one chart with something like this. So I think that's pretty cool.